Hello, everyone. My name is Nelson, and welcome to episode 5 of the DPDP series. And today we are here to discuss about cyber liability insurance and privacy risk. Now, this conversation is going to be more real for organizations day by day because today it's not just about preventing breaches anymore. It's about understanding what happens when something goes wrong and who is responsible, who takes the hit, and whether you're actually prepared for the moment. So, in a previous episode, for those of you who were not able to join us, we spoke more about compliance governance and more about the evolving landscape of data protection in India. But today it's time to take actually one step further in this series where we discuss, or let's say, where we explore real life gaps between being compliant on paper and being secure in practice. And which is why today we are honored to have Arjun Bhaskaran, sir, a seasoned thought leader with us, who is at an intersection of banking, economics, and digital transformation. And he's actively contributing to the industry dialogue on financial innovation and governance. So, welcome, sir, on our webinar series. And at the same time, I would love to introduce you to Isha, who we all already know. Isha is someone who continues to lead our conversations around building secure, accountable, and trust-driven digital ecosystems. So over to you, and we are excited for this series.
Thank you. Thank you, Nelson. So I hope I'm loud and clear to everybody. Hi, everyone. I think we are back after a little longer pause. Hope no one is missing out on our series. They'll continue to see this. And this time, I think the topic is a little different. So many of you might feel that how it relates to DPDP, but it actually does. So let's unravel the reality of the cyber liability in context to today's topic. So let me set the context for you about uncovering real world gaps between compliance, risk, and accountability is what we want to focus on. And we have an expert with us, Mr. Arjun Bhaskaran. Hi, Arjun.
Hi, Visha. How are
Hi.
you?
Good, good. Thanks. So, Arjun, I think this topic is a little different for everybody. So it would be great if you can make people understand that what we want to talk about and how do we relate this to DPDP. So maybe once we set the context, I'm sure a lot of people will have a lot of questions, and I would like to take this lead to ask those questions on behalf of the audience, and we'll take it ahead. So over to you,
Sure.
Arjun.
Thank you. Hope I'm audible, Isha.
Yes, yes, you're
Thank
clear.
you. So at the outset, my thanks to JISA Softech and to Isha for giving this opportunity to talk about cyber insurance and its relevance for in DPTP and cyber liabilities. So I have a short presentation of about 10 minutes to set the context for the audience. And then I will take questions from the organizers and from the audience.
Sure.
Let me just share my PPT first. Isha, is it visible?
Yes, your screen. Yeah, it's visible.
Screen is visible. Okay. So the topic of my short presentation, about 10 minutes, is on cyber liability, privacy risks, and insurance. Okay. Insurance, cyber insurance. Yeah. World over, no, particularly the advanced countries, North America first, and then Europe. The what do you say, onset of privacy regulations, GDPR 7 years back, and in the US, first was the state level California Consumer Privacy Act, which has now been, taken by many other states. So these privacy laws have driven cyber insurance adoption in a big way. See, cyber insurance in India till now, it has been adopted by organizations mainly from a cyber attack, a digital crime perspective. Okay, but the North America and Europe, while that remains as an important driver, the privacy regulation has been a very important driver of adoption of cyber insurance. So the privacy risks which become very important after these laws are implemented, these lead to potential cyber liabilities, actual and contingent liabilities facing the organization, and therefore they have been rushing, particularly enterprise as well as MSME also. Okay, SMB abroad have adopted cyber insurance in a big way. So as an outcome of this, the cyber insurance market worldwide in 2024, as per Munich Re, which is the world #1 reinsurance company, there they come up with the annual report on the state of the cyber insurance market. And as per the latest report, 15.3 billion is the premium in 2024. Now, this has been growing very rapidly, and in 2030, Munich Re expects it to touch 30 billion, double in the next 6 years. Okay, and the business 69% is driven by North America, 21% by Europe. Asia and Australia are just catching up. Somewhere here, India is a small piece right now. And the other important part is, see, when we compare the world, the digital world, and compare it with the physical world, property casualty insurance is, when you compare it with that, cyber is still 1% only. That means even globally, it has got a long way to go. And in India, cyber insurance, I would like to depict it as a 2x2 matrix. There are two pillars, cyber and privacy, and there are two layers, asset and liability. So in this 4 quadrants, till now, India has looked at cyber insurance mainly from a cyber perspective and from an asset perspective. It's largely from an asset perspective. Okay. But the coming of DPDP changes everything. It brings into focus both the privacy layer as well as the liability side. So this is a relatively new paradigm for organizations who have been used to looking at it in a very narrow sense. And there is a other dimension which is coming up is the while we talk about AI, see, this slide tells that globally at least 46% of organizations are in a scaling and optimizing mode with respect to AI. Okay. Now, while this is a good thing, AI brings in a lot of less known cyber risks, and then we are going to witness a new category of AI-related liabilities. See how AI can go wrong, even though if the chances are less also, it's not an impossibility. So how AI can go wrong, this has not been really thought through, and what is the mitigation for that? So very soon we are going to see cyber insurance will move to the next level of what we'll call AI insurance or AI liability insurance. So that is an emerging area, but I'm just flagging it that India is also adopting AI in a very significant area in almost all industries. So we have to be cognizant of not only privacy liability, the AI related liabilities also that could come out. Now, while cyber insurance is an important pillar of mitigating these risks, still globally, the cyber crime industry or the losses to cyber crime at a high end is estimated to be about 9.5 trillion, which means that the protection coming from cyber insurance is still a very small, minuscule part. And this is what insurance calls as the cyber protection gap. There's a huge gap between actual losses that are happening and how much is covered from insurance. And why is this happening? There are some few important reasons. One is that the price of cyber insurance, some people find it high. Okay, I'll come to it in the next slide. And the other important reasons are lack of product awareness and product understanding. And this is very surprisingly in the next slide. even at a CXO level, okay, at a C level, 25% of the C-level executives did not know that cyber insurance existed. And these are not small people. These are C-level people of $1 million and above kind of organization. So as of now, the product has been complex even for top management to understand. So this is changing and it will change. But this is one of the impediments. The other one is prices have been going up, and the reason is after the pandemic, we know that things like ransomware have been the incidence of ransomware and losses to ransomware have been very big. So because of the losses, two reasons: one, the losses are going up. Second one, the customers are not well prepared. They are not putting in enough protection, to handle these losses. So as a result, losses are going up. And the cyber insurance prices are going up. Now, cyber insurance, from an insurance industry perspective, quantifying the risk is very important, because only when insurance is able to quantify the risks will they be able to give the right price. So one, the losses have to be mitigated through better technology, better practices, and also we need to do the modeling and the risk measurement better to bring down the prices. So how to do that? We need to do the measurement. Right now, the measurement is happening world over only on cyber level and asset level, as I mentioned earlier. But we need to take it further to the liability level measurements, privacy level measurement, process and people. So this is a much more comprehensive risk measurement that needs to be done to get the right cyber insurance. And the important part for our audience is today, London, New York are the main hubs for insurance and cyber insurance. But India is a formidable player, and very soon post the Iran war, India is going to be a regional hub for cyber insurance, not just for protection of our subcontinent, even the whole region from Asia Pac to GCC. India will be playing a key role. And we will be extending protection to this region. And already two of our public sector companies, one is GIC Re, it's owned by the government. It's the national reinsurance company. It's already number 13 in the world. And so is New India, which is a giant with so many country presence. So these organizations will lead the foray in cyber insurance globally. This is my last slide. So my company, we are part of IIT Kanpur, and we are trying to be a global leader in quantification of cyber insurance. So we sit like a fulcrum in the whole industry to connect the corporate organizations, SMB on one side, and connect with the insurance industry value chain on the other side. So this is the context of cyber insurance that I wanted to lay for the audience. So Isha, over to you. We can take questions that you may have.
Sure. Thank you so much, Arjun, for this presentation. Including me, I'm sure a lot of people now know where we are heading and what we are talking about. And since there are a lot of things which already answers a couple of questions which are coming up, but maybe you've just tried to touch upon that, and this brings more curiosity in terms of doing a deep dive and getting more information and more knowledge from you, right? So aligned to that, I would like to ask something to you is there are many organizations which are compliant on paper. And I think day in, day out, we talk about it that compliance is not a tick mark, but we really need to secure everything. But still, there is a vulnerable practices, or actually, it happens in practice that there is a vulnerability. So, why this gap exists according to you? Because I'm sure you will be facing it a lot of times.
Yes. So I will address that question, and I have one slide on that. I want to share that.
Sure.
Okay, so why are organizations on paper, they appear prepared, but in real they are not? This is in my assessment coming from observing organizations across the spectrum, and from an insurance perspective, I see basically 5 important reasons why this is happening. Okay. And these are all, it's not a negative comment, but these are what I observe. So top management, of most organizations, the board of directors, they need to have a deep-seated commitment to compliance. And the compliance, the quality of compliance will do well only when it flows from the top. So that's the first area which is missing in some places. Okay. The second one is the CISO, or when we're talking about compliance, cyber compliance, particularly, the CISO is the like the evangelist for the whole thing, and how much of what is a self-belief and how much they are able to galvanize the rest of the organization, that becomes an important factor. And there are some CISOs who are more tech oriented and they have a very dim view of compliance in general. So they may end up going through the motion and it becomes like a blind leading the blind. So that could be a second factor. Okay. And the third one is you need, whether small organization or big organization, you need a lot of external support to put things in place in the form of consultants, internal auditors. Again, sorry to say, many of them are just paper tigers, and this is a very multidimensional area, and people may have expertise in one strand that they may not have in the other areas, and they may not put the right team together to make it complete. So the lack of appropriate competence on the side of the consultants and the auditors is the fourth reason. And the fifth one is, finally, compliance enforcement. It comes down to the regulatory bodies and the certifying bodies. Okay, both of them. I mean, in the regulatory bodies, we know primarily on the financial sector. RBI, we know in a more popular way, SEBI a little bit, then IRDA, very less is heard about. And then healthcare, there are a lot of standards, but is it really working? Is it enforced? Is a question mark. Okay, so these are the reasons why, unless there is a regulatory push and enforcement of strict standards, a combination of all these 5 reasons is why companies are less prepared. So this is my view by observation over the last 2 decades.
Oh, that's actually an ecosystem, right? Which itself is responsible for having these gaps. But ultimately, we are the one who's building this ecosystem, or who is the ecosystem. So overall, what I understand is the clear accountability is what I feel definitely needed, and is going to help us reduce this gap. So DPDP has definitely tried to cover this aspect as well, and it has tried to address in a way by introducing clear enforcement and penalties assigned to it. Like you said, regulatory enforcement has to be there, so which DPDP has tried to address. So aligned to that, do you feel that companies are truly prepared to handle these penalties and enforcements
towards most compliances? So we always see, okay, let us see when it comes. When we have been used to crying wolf over DPDP for many months. So people who are disconnected from technology sometimes may think, okay, it will take some time before it becomes a pain point. So they may be thinking that there's a lot of bark and it won't bite. So that's a misconception that some organizations could be having. Second one is they could be underestimating the severity of the violations, or the penalties that could come upon them. They could be badly underestimating the severity, and even B2B more mature organizations, I feel, are underestimating the time, effort, and budget needed to be compliant with DPDP before May 2027. So there is a general sense of a false sense of security. Many may be caught unawares. And from a cyber insurance perspective, I'm coming with a controversial view. Insurance will start looking at it not at May 2027. When you are trying to buy in November 2026 or 2020, now December, the policy period will be for the next 12 months. And if insurance industry believes that the organization is not well prepared, I feel many companies will be denied cyber insurance coverage. Okay, so this lack of compliance will start hitting companies well before May 2026. That's my view.
Sorry. Okay. I'm sure, which means you're trying to say that people don't have to take actually these penalties or enforcement lightly. It's quite serious and it has to be well managed and considered, right?
Yes,
And
correct.
obviously, as an insurance organization, or even people want to buy cyber insurance, which covers data protection or data insurance, these will be the aspects which will be looked at.
Yes, so
Correct?
while insurance is not the main mitigation, it's only the last layer. Because insurance the only player who's got skin in the game, apart from the customer. So they will be very worried about the quality of
Exactly.
complaints. Yes.
Yes. Right. So it's going to be
I
equally
think that
important.
is something that most players have not factored in, and the reality may start seeping in soon.
Okay. So when we talked about accountability and penalties which are associated with it, there's a whole lot of need even for ensuring it, because like we have our medical insurance, our life insurance, definitely it doesn't mean because I have an insurance, I don't take care of myself. Obviously, it is that there as well, we have a lot of conditions where we have to be eligible to be able to get that insurance or even to get the security. So if you have to move forward and deep dive a little about cyber insurance and risk exposure, so that we are able to understand how cyber insurance works and where the organizations are facing major challenges. So one of the very common question on behalf of organizations which are here, I would like to ask related to obviously cyber insurance and not making use of it even when there is a breach situation. So if that's the thing, then companies which are investing in cyber insurance, still a lot of times the claims are getting rejected, like you also mentioned, right? So what are they missing out on, which should be covered for to be able to, be really, really compliant and to be considered?
Okay. For the insurance to really work for the customer needs to recognize it is only the final layer of protection, not the first layer of protection.
Sure.
And if the earlier pillars are not adequate or they fail, then the customer cannot expect the last pillar to take the load.
I get your point.
So, and this is more true as we go to smaller organizations. The smaller organizations may look at cyber insurance as a catch-all, which will reimburse them for whatever can go wrong. But the important one is people, process, technology. The core pillars have to be in place. The baseline standards have to be enforced. Not just implemented, it has to be maintained through audits and verifications. See, insurance till now, cyber insurance is taken by the enterprise organizations, large organizations. So when they want cyber insurance, insurance company can afford to commission a big four or some big consultant to go there and study the system and give a report. But after DPDP, we are going to deal with a humongous market because it's not just the IT mature organizations, but all schools, colleges, hospitals, medical labs, hotels. The humongous market is going to come under the radar of cyber insurance. And cyber insurance doesn't have the wherewithal to validate whether these companies, these organizations have the technology processes in place before they can issue the insurance.
I think quite interesting because it's not on the one side, the other side of the story is also same, that equally insurance companies have a lot of challenge, but same, like as I said before also, I'm just trying to reiterate a bit.
Yes.
And it makes it more interesting for an organization like us also, that when we're talking about insurance, as you said, it's the ultimate layer, but in between, organizations needs to take care of their data, take care of the security of their data, their infrastructure, security posture, security architecture, or whatever they are deploying is very crucial. Similarly, like we do it for our health, while we buy an insurance, we make sure medically we are fit before we buy. They do the medical
Yeah.
test, right? So equally, organizations would have to go through that test, audit, to prove that they're taking enough measures in order to have that security in place, and which is where they're eligible to get it secured or insured. So I think this is
The
a
due diligence on the part of the customer is also something the insurance sector expects. Okay.
yeah, absolutely.
Yes.
So I think I'm just going to ask one more quick question, which is again more towards the insurance as well. So are the current cyber insurance policies, I mean, you've already touched upon the challenges, but it's also around the policies with, evolving privacy laws like DPDP. So are they aligned to it or are they outdated? How is it? The policies.
Yes, it's a very good question because the current policies are slightly behind the curve. Okay. Um, See, when you see a policy, how good or suitable is the policy, it comes down to the design of the cyber insurance product. Okay. On that, let me dwell a couple of things. One is, what are all the eventualities or scenarios which will be covered under that policy? That will be spelled out in each specific scenario will be spelled out in very clear techno-legal language. So in the last 5 years, we are seeing the technologies evolving. We had the CrowdStrike incidents. So new situations are emerging which are causing disruptions. Okay. Now, every possible technological situation has to be covered under the policy for us to be safe. So it boils down to how the policy is innovated or improved by the insurance companies. Okay.
Right.
The second one is, appropriate to that policy, how are they measuring the risk? Today, they ask through some questionnaires. So they give a set of questionnaires to elicit the right answers from the customer. But I find today the questionnaires are not adequate. They're not asking many of the questions related to privacy, liability to measure it properly. And other one is Indian cyber insurance market has been driven by it's a copy paste from overseas markets.
Absolutely.
But India is in some ways we are ahead of global in terms of technology adoption at the B2C level and at the SME level, thanks to UPI and the digital stack. Wherever in the airports we have Digi Yatra. So the kind of technology adoption at a transaction level is much advanced compared to other countries. And therefore, the ease of cybercrime, the ease with which things can go wrong are more in India, and the insurance products are not enough to support all the situations. But India operates sometimes slowly, but it operates very fast also. So I'm expecting very soon, because of DPDP and the huge market in front of us, insurance companies are going to come up with excellent products in the next few months to cover all these situations.
So that's a lot. And I feel, as you've really mentioned, that India is actually much ahead of the world in terms of the technology, because DPI is something which is globally talked about, like UPI, Aadhaar, and a lot of other infrastructure, digital infrastructure. Because of which I think you're right, India really need a comprehensive coverage policy, and insurers actually need to have a solid understanding on global vis-a-vis, Indian cyber coverage. And just not that, also it is very, very critical that these insurance companies knows the act or the law well as the ways and means of securing it. Otherwise, how are you going to initiate like a questionnaire, you said, or how are you going to judge whether the organization is taking enough efforts in securing their data? And I think companies like us understand it well because we work in that space. So when we talk about all this, people obviously know insurance helps and it is needed. But there are a lot of misconceptions due to which we see industry is slow on the adoption of cyber insurance, is what I feel. And so is that a fact? And what are the biggest misconceptions that organizations have about this cyber insurance or cyber liability coverage?
Okay. Um, so one of the big misconception we talked about earlier is that cyber insurance will pay for anything that can go wrong. So and this misconception could be carried in different degrees by even larger organizations, because they from a risk management perspective, they would not have thought through all the worst case situations that can go wrong. And they may have that false sense of saying, oh, we have cyber insurance, we have paid so much and it's going to take care of it. Okay. But it may fall through the holes.
Correct.
So the insurance, the client also, from audit committee, risk management, the risk management function, they should also do a kind of sanity check or audit of their insurance coverage. Does it dovetail into their enterprise risk analysis?
Okay.
So this is something I find is happening even with large organizations, not to speak of smaller SMB.
Okay.
Okay,
Yeah,
and,
right.
and the second one is there's lack of clarity amongst the customers on how much coverage to buy.
Okay.
Okay, now that is that also requires professional advice and assessment on. See, give an example in health insurance. How much do we need? Do we need 5 lakhs or you need 50 lakhs or 1 crore? Is a question mark. Okay, it will be driven by what is likely to happen to us in the next 2-3 years. If it's a cardiac situation, which hospital, or will you be taking treatment outside India? So all this decides whether it is 5 lakhs or 1 crore.
Correct. Absolutely.
So the companies, even the finance function or the IT function, don't have the right clarity on how much insurance to purchase.
Okay. Yeah, I think a lot of areas where we can actually talk about, the misconceptions that organizations have. I'm sure there will be organizations as well, which are already using cyber insurance for a long time. Those who are also, again, in the league of complying with DPDP Act, so they know what they want, how they want, because they've been having insurance. But definitely, when we do a comparative, analysis, I'm sure there's a lot of awareness which is needed. There is a lot of, adaptation, just not from a privacy perspective, but even from an insurance perspective that is required. So we talked about a lot of things here, like, about the gap which is happening, or the accountability and the penalties or liabilities around it, and the misconceptions which are there in the industry. So I'm sure there are many more questions or aspects to it. Even I myself have something more to ask. But in the interest of time, let me ask you a last question. But I think still we have enough time. So I'm going to add on some question which comes to my mind as well. Before we move on to that, which is more driven on the technology side, let me ask you something which is another major worry or area of worry for larger organization, and it also has a financial impact for them because it talks about the third party dependency. So when we talk about insurance, when we talk about accountability, there are vendors and there is a financial impact for many organizations when it comes to the breach which could have been caused by vendor. So with this increasing third party dependency, how do you think these organizations will manage liability when the breach has been caused by a vendor?
Yeah. So both in this case, the customer also in question, a large organization which is consuming a lot of product solution services from a variety of vendors, various layers of vendors. So it is a complex one. So it leads us into both third-party risk management and supply chain risk. So both these from a client perspective and as well as from an insurer perspective, because the insurer needs to understand it as much or if not more than the client itself before giving a mitigation for that. But again, like in mainstream insurance, how much residual risk? See, insurance will take only the residual risk. The client has to do the principal. They have to do their baseline. They have to do the due diligence on the vendor ecosystem, put the appropriate technology controls to filter the risk from coming into their system. And also they need to put the right SLAs and the legal agreements to fix the responsibility back to the vendors who are likely to cause it. So if these are not in place, insurance will shudder or will reluctant to cover the third party and the supply chain risks.
Okay.
So insurance will demand that they need evidence of the client having done technical, legal kind of due diligence on their vendor ecosystem, and it is maintained not just at the time of taking the policy, that these will be enforced and strengthened during the next 12 months when the policy will be in force.
Okay, so while they take the insurance, these aspects are considered and covered, you're trying to say?
Yes, it will be considered because as residual risk, it will otherwise come on the it will become a responsibility of the insurance company to pay for it. And if there's a gray area, it will go for disputes and litigation.
Yeah, I understand. Absolutely. I think
equally, insurance is also working. There is a quotation in insurance that the claim is the moment of truth for the insurance industry. So the insurance industry also wants to win the confidence of the prospective customers that claims will be settled speedily and in a fair manner without too much, So they are also working to make cyber insurance acceptable and widely available.
And I think more clearer so that it's easy, both the sides.
Yes, while clearer is that's a double-edged sword. If you try to make it clear, you will have to simplify the language. And if you dilute to that level, we will be missing out on so many nuances of the losses that can happen. Okay. So there can be, maybe what can be done is, depending on the customer, insurance can go out of the way to explain to them and make them understand the complexity. So rather than, I mean, like Einstein said, make things simple, not make it any simpler.
Insurance is complex. That's how we, individuals consider it.
I would try to give another, description of this. See, cyber insurance is a financial solution to a technological problem, and it is deeply embedded in legal language using mathematical pricing. So you have to put all the four in place to get it right.
Yes.
And because of that, it resembles a quote by Churchill. He said, Russia is a mystery wrapped in a riddle inside an enigma. So cyber insurance becomes like that.
You're true. That's true. So I think, while we're doing this interaction, I myself is so curious to, know more about it, understand how mature insurance industry is. Do they really understand a lot of nitty-gritties? But before moving on to that, again, one more question on my mind. Why? Because we were talking about this financial damage. It's all about legal language and all of it. So I just had this thought in mind, whenever any breach happens, okay, in case of a breach scenario, what are few mistakes which organizations make, which actually adds on to their legal and financial damage? I mean, it increase the damage.
Yes. Again, this is based on my observation of different organizations across the spectrum in India. See, when a breach, small or big, happens, the first one is the IT function itself sometimes is behind the curve in understanding that a breach has happened or a hack has happened. So that is a real situation. And next one is the natural instinct of the operational team is to do damage control, fix it, and they'll get into fixing it. They may delay escalating it to the higher management or to the executive management. So there could be a time loss, and also the fear will take over. What could go wrong, and there defensive instincts will come in to find out a scapegoat employee or a vendor to fix the blame. So all this will probably lead to distortions of what really happened. Now, this could happen within the organization at the lower levels, but equally it can happen at the higher levels also. We have seen this not just in IT and security, it has happened in other big crises that have happened with Indian companies recently. The board also can probably try to hush up things, cover up, camouflage, obfuscate. So delay reporting to the regulator or to the governmental authorities. All those we have seen it happen in other functions. So in my view, these are all like errors of omission and commission, which can complicate things.
Yeah, you're right, absolutely. In fact, DPDP also has tried to cover that aspect where the reporting of the breach timelines and again associated penalties, all of that is very clearly defined. So what you're saying is makes sense because more the delay, and if in case things go wrong, it's going to add on to the legal and financial liability for an organization. So I think this discussion is getting more and more interesting, but I'm sure I wanted to keep the session open even for live Q&A, which we can allow participants in last couple of minutes. And before we jump on to that, I personally have a question for you other than all of this, because we talked more around, accountability, gap analysis, how insurance is important, how what kind of penalties could be, how it could fail to get approved or claim can be rejected. There's one very important thing which I wanted to ask because insurance is it's a recovery part when something happens or something goes wrong. But isn't it better to equally uh, put importance and invest in prevention rather than or simply relying on insurance for recovery? I, I mean, what is your thought around it? Because you come from
You
that
asked a
industry.
great question, and there's something. See, insurance should probably bundle in prevention and restoration both. So there's something worldwide in innovation called embedded insurance.
Okay.
Okay, so in extending it into cyber insurance, cyber embedded insurance, my company, along with some big players, key players, we are working together. When you go to SMB organizations, cooperative banks or small hotels, colleges, they don't have the internal capabilities to put in place prevention, maintain it over 365 days. So they need external assistance. So insurance can be like a godfather, kind of a guardian who can help them put everything what the baseline needed into one single contract. Okay, so that way this is called cyber embedded insurance, where insurance is one of the offering, but along with that, certain baseline cybersecurity technologies can be bundled into one single price. And because insurance comes with volumes, it works two ways. For vendors also, it gives them a big gateway to address a large market, cuts down the cost of customer acquisition. And for the customer also, because of the volume discounts, they can get because small companies don't have the time to check Gartner, Magic Quadrant, and all that. So if insurance has taken a look at it, they will get like a package deal, everything that is needed to make cyber insurance work. So this is something, it is a big thing. It's going to be very big in India, and we are in the forefront of it.
So you were trying to say, okay, because I was talking about it from a curiosity point of view, as we are a cybersecurity or precisely data security company, where our focus is always on prevention,
Yes,
right?
correct.
So that there's enough security in place, all the data, whether it's structured, unstructured, whether it's on file system, whether it's database or in cloud, or it's current AI models which are coming up, need to be secure, is what we believe in, and we work completely towards that. Whereas insurance is something where, of course, the coverage is basically to cover if there is a miss, if there is a breach. So it's a preparedness towards, not leaving up to the security. So these are two things, but it is critical to go hand in hand. I think what concept you just shared, or the embedded cyber insurance, because I think it's a new thing too. Embedded insurance, of course, we've heard of, but embedded cyber insurance is something.
Insurance, yes.
Yes. So that's not something which is very common.
And it is driven by the Indian market opportunity. It may not work as easily in other countries.
Yeah, absolutely. So we talked about it, right? Because global players will have a different framework altogether, and using that framework in India absolutely may or may not work, or rather, more precisely, we understand it will not work. So this concept of embedded security is definitely important. In this sense, how do insurers will ensure, or the insurance companies will ensure, that they themselves have the understanding on the technology side of it? Because when you talk about, or any insurance company talk about selling it, obviously it's very critical for them to at least know the baseline or bare minimum technology, which is essential. And not only from an embedded insurance point of view, but even when a normal cyber insurance, if you're giving it, how do you assess, how do you make sure if you don't know the technology well? So is there any practice which exists in current industry?
Again, a very good question. So, see, in any risk management, risk, what do? You try to minimize it, manage it, and the last residual risk, you try to transfer it. So when we transfer it, whether it's cyber insurance or health insurance, it should be transferred to that body, which can handle that risk more efficiently.
Okay.
So if cyber insurance has to be the last post, obviously they have to have superior capabilities than the earlier players. Okay. While that may not be the situation as on date, this is a great opportunity for cyber insurance, for the insurance industry also. Again, just look at the Iran-Iraq war right now. The kind of achievements by Israel within Iran, or Iran in Israel or in UAE, we are hearing new situations. They have cracked new frontiers in cybersecurity. Okay, so insurance industry is going to quickly scale up to address these scenarios. Okay. So the way I see it, the industry globally, regionally, and in India is going to work backwards to build strong capabilities in cybersecurity to master cyber insurance.
Absolutely, because
so they needed both at the time of underwriting and more so at claims also. And see, we are a humongous market. Okay, because of DPDP, a city like Bangalore has got 1,000 colleges, okay, higher education institutions, highest in the country. Now, colleges are a prime target of, they are likely to be amongst the first to get penalties also. Okay, so there will be a big market. But to address this market, cyber insurance industry, brokers, everyone needs enormous capabilities to sell and service it.
Absolutely, because that's what I'm learning from all the conversation, that it's getting very critical to have the understanding and know-how on the technology. But I think we are getting quite deep dive, and my questions may not end. So let's see in case we have any questions from the audience. Otherwise, I have enough curiosity and questions to ask you. But then we'll just try to keep it open for audience. If they have any questions, sure. We can wait for a minute or two if we come up with questions. Otherwise, it's great to continue.
Yeah, correct. We'll look for their questions as we speak.
Yeah, just So maybe, so organizers, does the audience have option to post their questions? Yeah, I think we have somebody.
Yeah, Sudhir, you have a question? While they come up with a question, there's a question. Yeah, okay. Sudhir, you mentioned something about actuary, right? Okay. I'll touch upon this. There's like to know.
Know more about actuary.
Okay, I can address that question. See, the backbone of the insurance industry is mathematical modeling of the worst case situations. And there are the specialized profession called actuaries. Like chartered accountants, they are mandated under law. India's got an institute of actuaries. Every country has it. So they are when we say rocket science, the profession that is actually working in rocket science is actuaries.
Okay, I think it's even new to me.
To give an intuitive example, if flood insurance in Florida, it is done by number crunching of over centuries of data by PhDs. Okay, that kind of modeling takes place to come up with the price of flood insurance in Florida. Coming to that, we need actuaries to do this work. India has got only 400 actuaries. And this is a big constraint compared to other countries. See, a country like Australia has got 3,000 actuaries. A country like South Africa has got 3,000 actuaries. And United States has 5,000 insurance companies and 29,000 actuaries.
Oh.
And actuaries also are like a specialist, like medicine. No, you have a cardiac, ortho. Many actuaries are specializing in life insurance, some in property casualty. So it's a good question that Sudhir came up. World over, we need a whole brand of cyber actuaries to come up, and that number is very small even worldwide. So probably India can work along with the global markets to spawn this capacity. These people need to be very good in understanding what can go around technology and mathematically, statistically model it to come up with the pricing.
Okay, that's very new to me also.
But it's a very specialized area. It may not interest the wider audience.
Okay, so I hope, Sudhir, that helps you and answers your question. You can always connect otherwise also. That's great. Thank you, Sudhir. So do we have anybody else, any other question?
I have 2 points more to suggest while the questions come.
No, I think we can take it up.
Yes. So my 2 points what I want to bring. See, the DPDP, while the end date has been fixed, the DPDP board is not yet in place. And two big unknowns, in my view, are the licensing of the consent managers, one. Okay. And the other is the definition of the significant data fiduciary. So that is going to be like a thunderbolt that's going to hit many organizations, because many may be praying that they are not defined as a significant data fiduciary. But in my view, countless number of organizations are going to come because of the impact they have on so many lives. Okay, that is one point I wanted to highlight. So I feel for many significant data fiduciary, the time available is not enough. And a lot of their IT has to be reworked, because they have been amassing tons of data over years. Much of it will go out of the window after this law comes into place. That's one thing. Second one is we have the BFSI and telecom. Federally regulated industries are probably more, well aligned. They are well prepared. They have talked to corporate lawyers. But what about the other industries? The biggest impact is going to happen on hotel industry, education, healthcare, transportation. Much of it are under the state governments. Okay. So when you talk of the regulator is looking at the core business and they're looking at the IT. IT is only a secondary focus. So both will have to be looked together. That's where I am worried that these major industries, higher education, healthcare, transport, they all are coming under the purview of the state governments. So they will be caught unawares.
Actually, I have something on this. See, I think what government is looking at. One is about DPP or Data Protection Board. It's very soon likely to be announced. That's for sure. Then significant data fiduciaries, SDFs. Most of them, somewhere there is some definition given or a blur thing is given, and I think it's also a responsibility of individuals to take this up very seriously, because when we see the discussions happen, but it came out. So when the act is happening, the action is going to happen for sure. So that is one responsibility which individually has to be taken up. And third is, I think this makes a lot of more responsibilities for organizations which are specifically, I would say, maybe a large consulting firms or small consultants or data protection companies or OEMs like us, to take the responsibility even to spread word, join hands with the government and try to spread as much as possible, because very unlikely that the dates would go off and the act is already there. And as you rightly said, the BFSI industry or federally, regulated industry is something which has started implementing or has started identifying and taking action on the execution around DPDP. But definitely this I think keeps one of the open area where how each one of us, like you, me, we take initiative of spreading maximum awareness, because we know what it means, just not as a business, but as a country. Definitely there's a lot to contribute. So you're right. These are the common questions for organization like us.
Another area people need to look about is NRIs. There are about 6 million NRIs in the Middle East whose data rights will have to be protected under the act.
Actually, yeah. So I'm sure, I think there's a lot. So since we are already on the time, I think we won't be able to take more questions also from the audience. But it has been a great session. Thank you so much, Arjun. And I would like to, on your and my behalf, I want to thank everybody who has joined for this insightful session on cyber liability, insurance, and privacy risk. So today we explored on critical question like compliance alone is not enough, how trust resilience comes from understanding where your risk lies, who needs to be held accountable, or whether your safeguards and insurance, everything is reliable or not. So at CryptoBind, we really believe that control, visibility, and ownership are the foundation for digital trust, and we just want to contribute to it. And we hope on your and my behalf that, hope this discussion was helpful for everybody. And I'm sure it helped me a lot. So I'm requesting everybody here, stay tuned for our next session. Until then, stay safe, stay secure. Thank you. Thank you, Arjun. Thanks,
Thank you, Isha. Thank you, JISA, for this opportunity. And as you said, CryptoBind can be a very important pillar both for DPDP and for cyber insurance. So it will dovetail into the emerging market. Thank you.
Thank you so much. Thanks.